Good morning and welcome to the Daily Wrap from Pepperstone on Friday the 14th of July 2017. I'm Darren Sinden. Right, let's take a look at overnight changes, any price moves we need to be aware of. Well, it was a relatively quiet session yesterday. Cable made modest gains, closing in New York around 129.39. That aside, not really much to talk about. Cable. The pound was also a bit better against the yen, and I suppose we can see the Korean won strengthening slightly here. But we'll see if we have a more active day today. In terms of what's on the calendar, let's have a look at the events that may move the market today. I've filtered the calendar down to important events only, with quite a bit happening, but of note here, EU trade balance data at 9 o'clock London time. That's 9 o'clock GMT rather, 10 London time. And then this afternoon, a plethora, if I can use that word, of consumer-related data coming out of the US, including retail sales and the consumer price index data. Most of that is out at 12:30 GMT, 1:30 London time. There's capacity utilization and industrial production data to come later on as well. And before we leave, I should just point out that we got some slightly contradictory data from Japan first thing. Industrial production year on year and industrial production month on month for May. The disappointing thing here is that industrial production month on month fell by more than anticipated, down by 3.6%. There may be some seasonality there, so we'll have to wait and see what the future trends bring. Okay, let's take a look at breaking news that's caught my eye. First of all, an early read of Singapore's Q2 GDP comes in below forecast. So we've recently had some solid data out of Asia, but that was a slightly disappointing number alongside that Japanese industrial production one. The Hang Seng rally starts to lose momentum. China equity markets slightly softer today. Switching to the other side of the world, S&P has downgraded Chile on subdued growth fears. This, of course, just as commodities and the miners have started to rally strongly. The Dow Jones Index closed a new high for the second day running in New York. American equities really getting the bit between their teeth after Janet Yellen's comments and the dovish comments, should we say, over interest rates. And in China, regulators and business leaders will meet to discuss the state of the nation's financial markets in a two-day congress. Okay. Staying with the theme of global equities, I plotted a chart here of the S&P Global 1200 Index, the globe's 1200 largest companies, and you can just see the rally that they've been on since the spring of 2016. And although we dipped recently, we're back on the upward leg, and the uptrend really shows no signs of abating. Okay, food for thought, something for you to take away into the trading day and perhaps over the weekend. We are staying with equities for the moment. I think this is one of the key questions. And the question is, can the rally in equities continue if QE is withdrawn? The chart here shows us the S&P 500 index, the total return on equities, this plot in this salmon pink line. And the red line is the combined balance sheet of the world's four largest central banks, and you can see that they've basically gone up in unison as the central banks have put money into the global economy through QE. Equities have rallied. Not much chance of the Bank of Japan withdrawing QE, but there's every chance in the near future, or the medium term we should say, that the ECB could wind down its QE activities. So will equities continue to be inflated after that is the question, and one to think about. Thank you for your time. Please take a moment to read this risk warning. Trading FX and CFDs on margin can be a risky business. If you're uncertain of any of the risks, please contact your Pepperstone account executive. Thank you for your time. Have a great weekend, and we look forward to speaking to you on Monday.